As we head into talks, you look at the economy of both. Who has the upper hand?
I think it's about even. I think both countries are struggling a little bit. China clearly is struggling right now. They've got the ability to create some stimulus. It makes most sense, though, for both sides to come to some agreement. I think it'll be a little bit heavy on commodity trade for us and a little bit light on intellectual property protection, but we will still get some. It'll be improvement, and the market's not fully pricing in just how important this could be.
100%. If you price in sort of the negativity, then you're not going to look for the upside. But if you take a look at, say, Chinese debt and how much it's ballooned, we talk a lot about it, but a Bloomberg article coming out and saying 2 large Chinese borrowers also missed payments this month, so there's now defaults happening. How vulnerable is the credit market in China? I
think the credit market's vulnerable. We've seen it from the consumer side. We've seen that big slowdown in auto sales. There's a lot of consternation in China, and one of the things that we've been noticing is some of it's happened in the interior first rather than the port region, so it's not all trade related, which again is a good reason for China to come to the table, give us a little bit more, at least get the trade stuff out of the way so then they can focus on their internal problems.
How much of a constraint is the debt on their ability to stimulate? Because if it's another country, you'd say, boy, that's a really alarming amount of debt compared, for example, to GDP.
And I think it's not that big of a problem at this stage, right? They still have a lot of foreign reserve currencies, reserves. They can do a lot. They haven't stimulated enough. They're working on enough projects. I think China can work its way through that. It's problematic, but not as problematic as a country like in Europe with no growth potential.
Let me ask a somewhat different question. How much of that debt is held by Chinese, native Chinese, and how much is held offshore?
I would suspect most of it right now is held by native Chinese. I don't think as much is spread out, which again lets them do a lot more. It's still really a government-controlled economy, so they have that ability to, I think, make people take the losses that they want, which helps them make it through this, if they get a trade deal.
So if we get the trade deal, you mentioned some possible upside. Come inside the Bloomberg here. So these are companies that have exposure to China. The price is the white line, so that's definitely seen some gains, but the blue line is forward earnings estimates, and that's come down a little bit, a little dislocated from the stock price. Where's the upside?
I think the upside is people can discount a lot of the negative news if we get a trade deal. So a lot of what we're seeing is an impact of the tariffs and trade deals. And when we talk to a lot of companies, there are ways around it. When these started hitting in the summer and the fall, companies could move some shipments around and they could avoid those problems. As it heads longer, we're really feeling an impact both on earnings and growth from those tariffs. If we get a trade deal, that goes away. It's kind of all put behind us. We can go fresh looking, and I think we'll see that. And when I talk to market participants, I think we're kind of baked in a trade deal of some sorts is going to occur, but no one believes it's going to be that significant. I think that's going to be the real upside surprise is people are going to be shocked how much LNG can help the economy, and they'll be like, ooh, we missed this, and that'll be where the upside comes from.